Well, thank you all for showing up for our webinar with Stephen Wright at Irving Weber Associates. We are really happy to have Irving Weber Associates with us as one of our preferred suppliers. We've talked with members that have signed on with them, and they are very happy with the service that they've gotten from Stephen. And we are very happy that he's taking time out of his schedule to talk with our members and anyone else that's watching this webinar about how to control your insurance costs. Because as we talk to our members, especially our laundry members, insurance is a huge expense. And we'd like to make sure that you guys keep as much of that money in your pocket as possible. So Stephen, thank you very much for your time, and I'm going to mute myself and watch the chat for questions, and we'll have a Q&A at the end. Take it
Great.
away.
Thank you, Marty. I appreciate that. And good afternoon and good morning to everyone in attendance today. As Marty said, my name is Stephen Wright. I'm with Irving Weber Associates. And for those of you that don't know us, we are an insurance provider for the commercial laundry space and suppliers and distributors in and around the industry. We run an insurance program for property casualty, workers' comp, fleet and auto coverage on a national level. And this morning, or this afternoon, I'd like to have the opportunity to talk a little bit about insurance costs, not so much specific to insurance policies themselves, but just ways that businesses incur expenses and some tips for identifying and controlling those costs. And like Marty said, keep some of that money in your pocket instead of someone else's. So when I talk about insurance cost, I generally put it into two categories or two buckets. There's premium dollars paid and there's cost of claims. And we'll go into a little bit of both, and I'll clarify what I mean by each. So with premium dollars, you have the actual expense or the cost of the policy that you're charged by the insurance carrier for the levels of coverage that you have and for the various types of policies like workman's comp and building and equipment, et cetera. And then in addition to actual premium dollars, there are fees that are often associated with what you pay, billing installments, management fees, late payment fees, et cetera. And so those things, if not carefully monitored, can certainly add to your gross insurance cost. And then on the other bucket is cost of claims. And what I mean here is, what is the launderer or the business owner actually paying out of pocket for an incurred loss or an incurred claim, which includes deductibles, claims that aren't covered, loss of productivity, and then downtime, as it could relate to any type of loss. So first, let's take a look at ways to manage premium dollars. And I always tell folks it's a healthy practice in your business to look at your insurance every 3 to 4 years and do an examination of what you're covered for and what you're paying for that. And you don't necessarily need to make a change every 3 to 4 years, but it's a good idea to at least adhere to the practice of examining your plan. And the reason I say every 3 to 4 years is because insurance companies change appetites over time. They often manage their risks by their books of business. So if they have a commercial laundry program, or if they have a program for restaurants or churches or whatever it may be, the results of those programs within the insurance company's books may change over time. And therefore, claims may drive up overall cost, or particular success may allow them to monitor and control their expenses as well. So that's why it's a good idea to get into the market and talk to your insurance partner, your broker, your agent, and kind of find out what's available out there. And offerings change as well over the course of time. Needs change. 15 years ago, we were not having conversations about things like cyber insurance. And these days, it's one of the hottest topics. If anybody does business electronically on the web through social media, there's an exposure that exists, and the product offerings need to evolve and stay current, We don't know what tomorrow's evolution may bring, but I know there's talk about self-driving vehicles and delivery by drones and artificial intelligence. And, those may be topics that we're discussing as quickly as 12 to 24 months from now. So again, it's a good idea as a business owner to make sure that you're staying on top of that information. And I kind of use a little formula here about comfort leads to complacency, which leads to expense. So it's always good to be actively involved and stay on top of your costs. And then looking at your coverages, right? Do you have the right coverages in place? Basic elements of insurance policy would cover you for things like fire and theft and collision. But then carriers add what they call endorsement language to policies to really tailor it to what your business model is. So if you're an industrial laundry, if you're a uniform supplier, if you're an equipment manufacturer, the language in the policy could be endorsed to really narrow down the scope of what it is that's important to you, right? So if you're a launderer and your policy says that you're carrying medical malpractice insurance when what you really need would be customer goods or bailee coverage, then that's an area to identify where your premium dollars are being spent, but perhaps not in the most accurate place. Checking the limits of the policy is pretty important. Again, a periodic exercise every 3 to 4 years if you're not already doing it, at least annually. And within the limits, we're talking about building coverage. If you own the building, what type of assessment have you done recently to determine the value of the building? Have you done a replacement cost analysis with your insurance agent? Do we have an accurate idea of what it would actually cost to rebuild the building in the event of a total loss? Those figures tend to get outdated pretty quickly, so it's a good practice to stay on top of that. And your business personal property is basically equipment and contents and goods for rental or resale. And again, are those limits accurately reflected in your policy? And if your inventory has changed, you want your insurance limits to change at least once a year. And using your balance sheet for your non-depreciated assets is a pretty good exercise and a pretty good measure of staying current with that. Also within your policy limits is your business income. Depending on the size and scope of your operation, your business income insurance basically replaces any lost revenue following a loss. So if we have, let's say, for instance, a fire at a plant and the plant is shut down for an extended period of time, then that revenue stream is interrupted. And we want to be able to cover the ongoing or fixed expenses such as the rent, the payroll for the staff, the mortgage, the property taxes, the insurance, the accountant, legal, advertising, you name it. And so having an accurate business income limit as it reflects your actual expenses is pretty important. So again, something to revisit there as it relates to how much you're spending. And then if your business has any seasonal fluctuations, there are endorsements and policies that allow for percentage changes according to the season. If you're a ski resort, you obviously are busy in the winter and not so much so in the summer. And so that's an example of how a seasonal fluctuation could affect you. And putting the money in the right buckets just to make sure that as we look at a macro level of an insurance program, that we may be spending $1 in premium, but are we spending the $1 in the right places? In other words, are we assessing the risk and putting the right levels of coverage behind it? And the example I have here on the next page will give you a good idea of that. And I see this quite often out in the real world. And we've got sample A and sample B. Let's just say that each of these businesses are an industrial laundry, and they carry 3 levels of insurance: the general liability, the auto, and the umbrella. And they each carry different limits. So in sample A, right, they've got $1 million of general liability for their slip and fall or their product coverage. They've got $1 million on their autos that are out on the road, and then they put a $2 million umbrella on top of that. So umbrella will stack over those 2, what we call underlying limits, for a total of $3 million. In sample B, this particular one has put $2 million of coverage into the general liability, kept the same $1 million on the auto, and then went with a lower umbrella of $1 million. And the reason I make this point is, even though in some cases they're both carrying $3 million of coverage, they're not exactly putting it where the risk lies. And so the question here is, do you have a greater accident or a greater risk for an accident of somebody a non-employee, let's say a visitor, falling on your premises and sustaining an injury, or having an accident out on the road. And if, from experience, as we all know, right, there's a 200% greater chance of having an accident with one of the commercial autos than there would be of somebody slipping. So sample A would be the smarter way to do it, where we put a higher umbrella over lower underlying limits versus higher general liability, like in sample B with the lower umbrella. So even though they both may be spending that $1 of premium, they're spending it in different ways. And so we want to be smart about how we spend. Again, one of those topics that we talked about earlier that has become prevalent in the workplace is employment practices liability coverage, and this is coverage for the employer as it relates to their relations with their employees against claims of harassment or discrimination based on age, ethnicity, race, hostile work environments, and it's pretty broad language as far as the policy is concerned. But I would say for any business who's employing more than just immediate family members, there's a need for this level of protection. And it's become part and parcel to commercial policies now. And the nice thing about having the coverage is even if the business hasn't done anything negligent to contribute to a claim, let's say the claim is frivolous, this level of coverage picks up defense costs. So in the absence of having this insurance, right, the business owner is now exposed for what I'll call the uncovered claim, and they go out of pocket on those expenses. But it may be more prudent to buy a less expensive insurance policy and then use those defense dollars to your advantage. On workers' compensation, depending on your corporate structure and the state that you're in, the question is often asked as far as the executive officers or the shareholders of the corporation is if they draw salary from the company, should they be included in the workers' comp plan? And in some cases, depending on structure and state, they're automatically excluded and then have to elect to jump back in, or in some cases don't have the option to exclude themselves. But if the opportunity is present for an executive officer, then they can exclude their payroll from the workman's comp plan and save some premium there. The flip side of that is if they're not included in the plan, then they are not covered for a workman's comp claim. But most business owners, if I know them, are coming to work anyway, even if they're all bandaged up because they own the business and they want to be there to run it. And most business owners also have a backdrop of health insurance or personal disability policy, et cetera. But again, something to be cognizant of in terms of looking at how we're spending our money. Second part of our discussion today is cost of claims, right? And so we have dollars that go out of pocket from the business toward a loss that may be insurable or uninsurable. And the first part is the deductible. And I tell people that if you have a favorable loss history, then and you feel confident in your operations, it's okay to bet on yourself and raise your deductibles. So for example, if you carry a low deductible on your building and your equipment and you haven't had a property loss in the last 10 years and you're in a relatively safe area, then you're paying additional premium to keep that deductible low. And if you don't think you'd file a claim for a $1,000 sign loss outside of your building, then there's really no reason to keep the deductible low. You can have your insurance partner run samples of our deductible options and hedge against the fact that you won't have any property losses. And conversely, if you have frequency of losses and you want to keep your deductible low so that you don't carry that additional copay, then you can certainly take a look at that as well. But deductibles are always an area where you've got some flexibility toward your cost of claims. A question I'm often asked is on workers' compensation losses. We've had a minor injury, and the business owner will say to me, should I put this through workers' comp or not? And so it opens up a conversation, which my advice is typically if it's a identifiable and manageable claim that we don't think will have a long-term effect, such and I'm talking here about maybe minor debris in an eye or a cut finger or broken toe or something that's quantifiable and allows the employee to recover quickly and get back on the job, then theoretically, there is an advantage to not filing that claim and sending them down to the walk-in medical center and getting that paid for out of pocket by the business. And the reason I say that is because in the calculation of an experience modifier, right, which is a factor in your premium pricing and your workman's comp plan, it's more detrimental to the business to have numerous small claims than it would be to have that one large loss, every 10 years or so. So those large losses are capped in the formula calculation and therefore are not as prohibitive as one might think. But the frequency of the smaller claims can actually drive the experience modifier higher than if you took care of those yourself. And the advice, again, is always if it's an injury to the employee that you think may carry a longer tail, such as a back injury with some muscular issue where physical therapy or rehab or potential surgery exists, then yeah, absolutely file the claim. But if it's a small injury that you can quantify and agree to that it can be handled expeditiously, then there is an advantage to handling some of those things out of pocket. This slide here just talks a little bit about common workplace injuries within a plant or a warehouse or a facility. And it's good to be aware of where they come from. Overexertion is the #1 cause of injury to employees. And then obviously contact with objects and then slips and falls. But this allows the business owner to take a more proactive approach to workplace safety and personal protective equipment and load lifting and identification of where potential injury lies. So it's always good to revisit those figures periodically. If a business carries any type of hazardous waste exposure or handles any type of chemical, there is a risk that goes along with having those hazards on your premises. And whether you're a building owner or you're a tenant, that is something that you may want to consider in purchasing a pollution liability policy, which will protect the business against sudden and accidental spills. It'll also cover things like defense and remediation and soil extraction and testing, etc. And that may be the prudent way to go to spend some money on premium versus carrying a self-insured exposure when the DEC or the Department of Health comes knocking on the door. Certificate holder language is really important in terms of relationships with both customers and suppliers or vendors or contractors. The reason I say this is it really has to do with deferring or passing liability along to the appropriate parties. So when you think about a chain of commerce, right, especially for an industrial launderer, they have let's say, their client may be a hotel, right, and they rent and launder bed sheets and towels and linens for the hotel. Well, the hotel will also have a client. We'll call that person the end user. That's the guest of the hotel. And then there's a manufacturer in the picture who actually would manufacture and distribute the sheets and the towels. So an example would be if the guest of the hotel had an allergic reaction to maybe some of the material that was used or some of the soaps or detergents that were used. Think about who would then get lined up in the event of a claim or a suit. It's going to be the franchisee and the franchisor of the hotel. It could be the property owner. It'll be the launderer. It'll be the manufacturer of the garment itself. So as everybody gets named in these suits, additional insured language allows you to earn protection levels from your partner's insurance policies. So if a launderer buys linens and goods from a particular distributor and they ask for additional insured status on that distributor's policy, it allows your defense expense in these claims to be picked up by your supplier's insurance instead of using your own. And conversely, when a launderer goes out to a facility and enters their premises, as they all know, those building owners, those property managers, those clients ask for additional insured language on the launderer's policy for this very same reasons. So basically, they're deferring exposure from one to another. Another area under cost of claims is hold harmless agreements, right? Whether it has to do with contracts or leases or easements of property, other legal instruments. A hold harmless agreement would certainly be a non-insurance risk transfer, but again, we're talking about total cost of claims and exposure, and in particular cases, you'd be moving the risk and the expense to another party. Also important to know that if we have vendors coming onto the property of our client, whether it be a distributor or a launderer or whomever it may be. So let's say an electrician comes out to do some work or a roofer comes out to do some repairs. We absolutely want to use initial insured language or a hold harmless agreement. So not only do you want proof of insurance when they enter your premises, but you want to be named on their policy as initial insured so that if they do sustain an injury on your premises, that exposure has been transferred back to the contractor so that we don't wind up becoming the employer and using our own workers' comp for somebody who's not even an employee of ours. I think a safety culture is a real contributing factor to overall cost of claims. I spend a lot of time traveling around the country and visiting plants and warehouses and touring facilities, and you can find evidence, immediate evidence, when there's a safety culture in place, because it starts at the top with owners and shareholders and leaders. And you're looking for signs, you're looking for equipment, you're looking for a general awareness, manuals. Walking through various plants, you kind of get a sense of who's on top of their culture and who's not. And so that environment will certainly drive the behavior of the employees to be a little bit more careful, to be a little bit more diligent, certainly more aware toward safety and the reduction of claims exposures. Disaster planning, that may be one of the top questions I get asked by business owners is, what are your biggest fears? And the number one is, if I have a disaster, can I get back into business? And how do I get back into business? So in the slide that we see here, we've got an example of a fire, a significant fire, and so the lost revenue and the ability to rebuild and, the downtime and the lost business as a result of it, it all comes back to really the available capital of the business and the insurance available to handle that and recover from a disaster. And the majority of businesses that don't go back into business fail because they've run out of funds and they can't afford to handle the payroll and buy new product or rebuild a building or a facility. And so disaster preparation goes to many different levels. There's pre-loss, there's post-loss, there's where do we store our information, how do we plan for a disaster, and I'll take a look at the next slide here. A lot of the questions are, what do we do if the location is no longer operational? Can we find other facilities in the general area? Where did we back up our data? Is it cloud-based? Can I get my hands on a receivables run? What's my payroll look like? Critical information about insurance and banking. Communication plan with employees is huge toward controlling cost. How do I let my employees know, my suppliers know that we've had an interruption? And then outsourcing. Who are my allies in the industry? Where can I go when I need to borrow operations or outsource my practices? And again, it all drives back to various ways of how can I control my costs and what am I doing before a disaster occurs. So in closing, just to kind of rehash, right, we've talked about premiums. Insurance premiums themselves are certainly far more flexible than what they may appear in a policy. We want to look at all premium-related costs. Claims costs are driven by insurance conditions and uninsured losses. So make sure that you're looking at your business, asking a lot of questions. Talk to your insurance partners. Can I get covered for this? Am I covered for that? How would a claim be settled? Certainly fair questions to ask. An aggressive management style can certainly help corral your expenses. And owners and leaders who are engaged in their insurance program will certainly have a better feel for and be more proactive in controlling their costs. And then overall awareness, I'm talking top to bottom in an organization, will lead to best practices, which will lead to top level cost control. So with that, I'd like to thank everyone for their time and their attention today. And if there were any questions, certainly would like to open that up. And again, appreciate the opportunity.
All right. Thank you, Stephen. We actually do have a couple of questions regarding insurance against data breach. You mentioned cyber insurance. Is that something that's on the rise and people are looking to, or maybe that's not on their radar, but they need to be thinking of? Is that something that people need to consider?
The answer to that is a yes, for sure. Their exposures exist in many different ways. Examples would be if they do any web-based business and there's payments that are exchanged, whether they're incoming or outgoing through EFT or credit card or whatever it may be, there certainly exists now the opportunity for data breach and protective information of their clients. Some human resources archive information for your employees is now stored in a cyber manner. So there's there's sensitive information that can be breached in the event of an attack. So yes, without question, it's a prominent topic, and we're seeing most insurance companies now are providing some level of coverage kind of built into the base policy, and then if that's insufficient, standalone policies are certainly prominent within the industry now.
And you talked a little bit about the chain of liability with the example of the hotel, and Laura's asking about product liability insurance. Is that something that would be a separate rider, or is that something that you kind of mentioned that could be transferred to maybe your suppliers with specific contracts?
Yeah, good question. So yes, product liability, depending on what type of product is being manufactured and to what extent, would normally be either an add-on to a policy by request, or it could be a standalone policy on its own. And it really goes back to the manufacturer. You think of it in terms of, I use the example of linens and whatnot, but it could be, somebody who's making airplanes or making toys for children. There's going to be a product liability for safety where the public has a fair expectation of the performance and safety of that product. So if our client is purchasing, or let's say uniforms from somebody who manufactured them, we certainly don't want to carry the exposure of the manufacturer because we didn't actually make the uniform. So that's where that additional insured status on the manufacturer's policy will protect our insured to a certain level.
Right. And that leads to me to have a question. These are fairly specific questions and liabilities to our industry. What's the danger for, say, our members that may have been used to dealing with a insurance broker that's just used to a general business insurance coverage, as opposed to somebody like Irving Weber that knows the business?
Well, I think you have to have an understanding of where the products come from and then how they're handled and processed as they go out to the launderer's client. So for example, if a garment is made overseas, for example, in China, and then is brought into the U.S. by a distributor who then sells it to the launderer, right, who then rents it to the hotel. So you think about, all the different chain of command there. One significant challenge is passing liability back to a foreign entity. So if a garment or a product is made overseas, the distributor or the first touch point as it hits the United States is really where the liability would begin or end, if you know what I mean. So
yes,
if we're purchasing something from a distributor and they're the ones that brought it into the country, then we want them to carry the liability on that product, because it would be almost impossible to go back to, let's say, the Chinese manufacturer who
right.
is outside the jurisdiction of our country.
Not something people generally think about.
Yeah, you're right about that. But it's something that there needs to be an awareness of, and certainly an understanding of how our industry works allows us to ask those questions.
So, a question for you, because you are attuned to the liability issues. is it a practice with Irving Weber to do sort of a walkthrough with customers to help them spot and see where they can reduce their liability and possibly lower their premium?
Yes, absolutely. One of the first things we do is we sit down and have a conversation about the operation of the business itself, even before we get into any insurance-specific dialogue. It's really about tell me what you do and where are all the moving parts of your business. As you know, some of our common clients are very diverse in their business models. It could be linens, it could be garments, it could be floor mats, it could be a variety of different things. So we'll visit the website, we'll look at what their products and offerings are, we'll look at where they go and what they touch, and then certainly ask a series of questions, about who their clients are and what those clients' expectations are for coverage and risk transfer and whatnot. And we'll even review, what may be on their current program as far as those additional insureds and ask a lot of questions about those relationships. Because at the end of the day, we could cover 95% of all the exposure, but if we left 5% uncovered and we had the chance to cover it and we missed it, then the client's left with an exposure that they certainly don't want to have.
And the last question that I have, what happens in a case where there are suspicious claims, either from a end use of a product with a customer who has a suspicious claim, or possibly a workman's compensation claim that seems suspicious? Is there anything that can be done from the insured's point of view to investigate that?
There is. Certainly, if there's any level of suspicion on the part of the insured, who was often the employer in a workman's comp case, or if they have a funny feeling about maybe a slip and fall claim or something along those lines, they should bring it to their insurance partner's attention. Every insurance company who's paying those claims should have a special investigation unit, and they can be certainly put on notice and start to investigate the claim and come at it from a different angle, if you will, searching for fraud or arson or whatever the circumstances or doubts may be. But those are conversations that take place all the time, and certainly we'd want to know the business owner's perspective if they didn't feel that it was 100% legitimate.
Well, Stephen, thank you for your time, and I'm hoping everybody who's been with us on the webinar takes a screenshot and jots down your information so that they can contact you directly if they have any questions.
Yeah, I certainly welcome any questions or level of contacts from anybody who's interested or wants to expand on anything that we covered today, and want to thank you for the opportunity, Marty.
Thank you very much.